just like everyone else, I think the two most stressful parts of this business is, finding a good deal and then finding the money. Haven't had issues with lenders,
Yeah.
with our deals, because we've all, we make sure, we underwrite conservatively, but, trying to find investors consistently is the other challenge. So
Yeah. Now I look at your portfolio, and you're looking, predominantly Arkansas, Georgia, and Florida. You're working down there in the southeast. So what are you finding now? I mean, first off, you've got a couple of multifamily deals under your belt, and it looks like you got them just before COVID hit. So how's it going with COVID for you?
yeah, so last year was horrible.
Yeah. Okay. Thank you for your honesty there, Colby.
It was, when COVID hit, we were still, pre-COVID, most, all of our deals were coming from brokers. Building those relationships. And once COVID hit, and especially once we had the lockdown, we started looking at them and going, okay, we have to be a little bit more conservative. We started increasing our vacancy rate just to try to compensate for
stressing the deal.
Yeah, highly stressing the deal. So we actually bumped it from our standards 10% vacancy that we kind of would stress our deals to. We bumped that up to 20, sometimes 25%, depending on the market, just because
and it killed some of your deals.
And so we weren't finding anything, and everything we were getting from brokers was still pre-COVID pricing. And then, so, after about 6 months of
and just so everyone understands, pre-COVID pricing means that's when everything was at 95% occupancy, when you're looking at 5% vacancy for both physical and economic. And the banks will, like you said, they'll get money on that all day long and twice on Sundays. But then, when that economic vacancy starts to creep on up there, no one's getting a loan on that one. No one. The numbers just don't make sense, and the banks won't even lend on it. So, but the thing is, the sellers and the brokers still think their baby's the prettiest thing on the street, and they haven't adjusted their prices. They think this is just a temporary situation. I'm not going to lose my shirt on my investment because of this. So yeah, we see that a lot.
Yeah, absolutely. And so we started noticing, hey, we're just spinning our wheels and we're not getting any deals. So we switched gears July of last year and really dove into cold call. So building up relationships, bypassing the brokers, and going direct to seller. And
okay. So here's my take on that. Even the use of direct mail, going direct to the owners, it works every single time it's been tried. And, this is a sales and marketing business. You got to get out there and find those sales before anybody else does. How do you choose? You can't just do this all over the country. You got to choose particular markets and specialize in those markets to find those. So where are you looking predominantly? What type of market? Is it a primary, secondary, tertiary market? What size units do you go for? Or does that even apply?
So I don't like competition. So I live in Colorado, and I do not own any commercial real estate in the state of Colorado.
All right, just for the record, I live in Massachusetts. I never owned any property in Massachusetts. No way. Yep.
Probably for a lot of the same reasons.
Yep, I bet you so too.
Right, and I looked. They always say, it's look in the backyard, and everything. I couldn't compete. I can't compete with the REITs and the institutional money. And in the suppressed cap rates. Literally when I was really looking into it in the height, pre-COVID, I looked at a C-class value add. That was a sub 5 cap rate.
Oh my gosh.
Had been value added like 4 times.
And you want to know what, Colby? I bet it's sold. I bet it's sold. Yeah. And you know who it's sold to, Colby? Who bought it? What we call California investors.
More than likely.
Yeah.
Because they can come in and they can pay cash.
Yep. They have more cash than smarts. Yes. And as soon as the market shifts, they're the first ones out the door.
And it's funny you mention that, because I have a 20 unit under contract right now, and they are a California seller.
Yeah. They're done because 20 units is a small one to be able to. And what is that over here in the southeast side of the country?
It's in Arkansas. Yep.
Yeah. And the thing is, they don't want to have to deal with that. It's probably going through some tough times right now with COVID, and they don't want to work that hard.
He's not. He was an absentee owner, basically.
Yep. Yep.
So, and it showed in the property. And so we were able to get it
Yeah.
at a discount. We're going to go in and put some CapEx, and we're going to turn around. We got a few different ideas for our business plan, and we're going to increase rents by about $200 to $250 a unit.
Okay.
So,
$1 million question. How'd you find that deal?
cold call.
Bingo.
Yep.
It works every single time it's been tried. So for those of you thinking like, oh, the brokers aren't, it's like, forget the brokers. The brokers don't, they owe you nothing. The brokers are, they owe you no fiduciary responsibility. They got 100 other people asking them for the same thing. They work on commission. They call them brokers because they're broker than you and me. And they have nothing to do with your success. You've got to go out there and do it yourself. So I'm so glad you said that, Colby. You're barking right up my tree. So that's great.
And the other part of it too is I don't focus on the sexy markets. So
Yeah.
I'm not in Dallas. I'm not in Denver, Atlanta. I'm outside of Atlanta, but that one was as a partnership when I was first starting out. But my main markets, I'm focusing on Arkansas, Indiana, and Northwest Florida right now as my primary markets. I'll invest in other people's deals and markets if it makes sense. But where I'm focusing on my three, and they're all secondary, smaller markets. And what I like is slow and steady.
Yeah.
Everyone asks me, why are you in Arkansas? Because you're not.
Yeah.
And I'm still finding deals. I'm finding, I'm closing on one here, hopefully in a month or two.
Yeah.
So it's, I like those ones. I can take my time. I love those smaller markets.
If you look at, for those of you listening, if you go to IRR.com, download the Viewpoint report for 2021, scroll down to page 28 where the multifamily section starts. It'll show you where all those major secondary, tertiary, primary markets are in the cycle. And actually, Little Rock, Arkansas is at the bottom of the market. That's the time we buy. So yeah, Arkansas has got some good signs right now. It's the time to jump in.